Classic grid strategy reimagined. Intelligent grid system based on moving averages that does not predict direction but captures volatility, automatically positioning buy and sell points to turn every bounce into a profit opportunity. Are you tired of complex technical indicators? Have you ever spotted the right direction but got shaken out by short-term fluctuations, making emotional decisions that lead to frequent stop losses? Many traders struggle not because they lack market insight, but because they cannot overcome psychological interference. When anxiety and hesitation dominate your trading, even the most precise analysis can fail. What you might need is not more complex tools, but a systematic strategy that helps manage your mindset. Grid trading is exactly such a method centered on discipline and mechanical execution. Through preset rules, it frees you from worrying about every small price movement by automating the trading process. Today, I am introducing an improved approach, a smart grid system based on moving averages. It incorporates dynamic adjustment mechanisms into the traditional grid, aiming to adapt more intelligently to market conditions. Understanding and applying this logic can help you participate in market movements more objectively, gradually building a trading system that reduces emotional interference and enhances discipline. Grid trading, a classic quantitative strategy, converts complex market judgments into mechanical trading rules. Its basic principle relies on an important market law: prices always fluctuate around a value center. We can think of this as setting up a dense trading grid in the active price range, with the system automatically executing buy or sell operations when price crosses grid lines. The profit logic is built on the basic principle of buying low and selling high. During price declines, the system buys in batches at each grid position, reducing overall risk through cost averaging. During price increases, the system gradually sells positions built at lower levels, locking in profits. Each complete buy and sell cycle generates a return. The advantage of this mechanism is that, even if your short-term direction prediction is wrong, as long as prices eventually return to the oscillation range, all previous buy positions can become profitable when prices rebound. Traditional fixed grid strategies are limited because once the grid range is set, it cannot be adjusted. When market trends change, the grid may completely miss the price action area, making the strategy ineffective. Our smart grid system solves this fundamental problem by using a long-period moving average as a dynamic axis, allowing the grid range to automatically adjust with market changes. It is worth noting that because the grid is based on dynamic moving averages, there is a theoretical risk that buy and sell price relationships are not fixed. However, the strategy minimizes this risk by using long-period averages, ensuring grid adjustments are slow enough. The specific implementation first calculates a long-period moving average as the price center, then sets multiple grid lines at equal distances above and below this average, forming a dynamic price capture zone. When price falls through a grid line, the system automatically buys at that position, provided there is no existing position at that grid level. When price rises through a grid line, the system automatically sells the position from the grid below, realizing profits. The strategy tracks order status at each grid position with a Boolean array, ensuring no duplicate positions and resetting grid status immediately after completing trades to prepare for the next opportunity. The core advantages include grids that dynamically change with moving averages to adapt to different market environments, independently managed grid positions that avoid wasting capital and improve trading efficiency, and continuous profit opportunities as long as market volatility exists. This makes the strategy not only profitable in oscillating markets but also effective in trending markets through dynamic adjustments, representing a systematic upgrade to traditional grid strategies. Parameter configuration determines strategy performance. First, we define the declaration statement with pyramiding set to 15, allowing up to 15 same direction orders to ensure grid trading can place consecutive orders. The moving average length defaults to 300 periods, defining the time dimension the strategy observes. This longer period serves two purposes. It filters short-term noise for stable price reference in oscillating markets, and ensures the moving average changes slowly enough to avoid potential price mismatches from frequent grid adjustments. The grid deviation rate defaults to 3%, determining the width of the capture system. This parameter should match the volatility characteristics of what you are trading. Higher volatility assets need wider grids to avoid false breakouts, while lower volatility assets can use narrower ranges for more frequent triggers. The number of grid lines defaults to 15, with more grids offering higher precision but smaller profit per grid in a fixed range. These three parameters work together and need adjustment based on market characteristics and your risk preference. Moving to the core code, the strategy calculates a simple moving average, but but uses it differently than traditional approaches. Here, the SMA is not used for trend judgment or signal generation, but as a dynamic axis for the grid system, locating the price center. This application extends the functionality of a classic indicator. The strategy expands from the SMA base to form price activity boundaries. This design concept comes from statistical distribution and Bollinger Bands thinking, but with more flexible implementation for precise control of the capture range. During grid system construction, the strategy calculates grid width and creates evenly distributed price grids using arrays. It is important to understand that these grids adjust dynamically as the moving average changes. But because we use a long period average, adjustments happen extremely slowly, basically maintaining the stability of traditional grids. By storing grid prices in arrays, the system achieves efficient data management, laying the foundation for precise trading signals. This structure design lets traders precisely control entry frequency and risk exposure. Note that the var keyword is crucial here. In Pine language, variables declared with VAR are initialized only on the first bar and maintain their state afterward, not resetting on each bar, allowing real-time tracking of order array changes. The strategy uses a long-only approach, which fits well with the current long-term bullish characteristic of cryptocurrency markets, taking full advantage of the upward trend benefit in digital assets. The strategy loops through all grid positions, checks price relationships with grid lines, and generates buy and close signals. When real-time price breaks below a grid line and that grid has no existing order, the system triggers a buy. The order status tracking system is the biggest innovation. Using a Boolean array to record each grid position's status prevents duplicate positions at the same grid level, optimizing capital efficiency. When price breaks above a grid line, the system checks if the grid below has an order, and if so, closes it for profit. This buy low, sell high mechanism matches price oscillation characteristics, turning each fluctuation into profit. After closing a position, the strategy immediately resets the grid status to available, allowing the system to capture new opportunities when price falls again, creating a sustainable cycle. This dynamic management keeps the strategy vibrant long-term, adapting to market changes. Using grid index as order identifiers enables precise order matching, ensuring complete and accurate trading. Strategy execution is precisely controlled through strategy entry and strategy close functions. The strategy entry function has three key parameters. The ID parameter uses the grid index string to ensure each order has a unique identifier. Mapping orders to grid positions, the direction parameter is set to long, indicating this is a long-only strategy. The comment parameter adds grid position information, making it easier to track each trade's source and performance during backtesting. The strategy close function precisely matches orders using the ID parameter, ensuring only orders at specific grid positions are closed, avoiding incorrect closures. This order management system enhances the execution precision of traditional grid trading. The strategy updates the Boolean array's order status in real time, preventing duplicate trades and optimizing capital allocation efficiency, which guarantees the strategy's long-term stable operation. The strategy's visualization design balances practicality and aesthetics. Using multiple plot functions, all grid lines appear in yellow on the price chart with 10% transparency, making them clearly visible without interfering with price trend observation. The code uses conditional logic to keep the display consistent with user settings. This visual grid system provides traders with intuitive decision references, making complex strategy logic easy to grasp. Traders can clearly see all potential trade trigger points, anticipate system behavior, and enhance strategy operability. This grid strategy performs differently across various market environments, and understanding its suitable scenarios is crucial for successful application. It excels in sideways, oscillating markets where prices fluctuate around the moving average, activating buy and sell operations with each oscillation to accumulate returns. It also adapts well to mild one-directional trends. For example, in a slow uptrend as the moving average rises, the grid system moves up with it, still capturing buying opportunities during pullbacks and profits during rebounds. However, it faces challenges in severe one-directional trends, especially rapid declines. Since this is a long-only strategy, prices may quickly cross multiple grid lines, resulting in several buy positions with no profit opportunities, creating capital pressure and drawdown risk. Therefore, using grid strategies requires good capital and emotional management. Grid strategy parameters need flexible adjustment based on different cryptocurrencies and market environments. A common mistake is blindly pursuing denser grids, thinking more is better, when in reality grid numbers should match market volatility characteristics and capital management strategy. Advanced users can dynamically adjust parameters for different time frames, widening grid spacing during high volatility periods to reduce false breakouts, and narrowing spacing during low volatility periods to increase capture efficiency. For users wanting deeper optimization, Consider developing dynamic rebalancing strategies, combining asset allocation concepts to further enhance strategy adaptability and risk control. Looking at this grid strategy from a quantitative trading evaluation perspective, it shows distinct characteristics across multiple dimensions. In terms of completeness, the system builds a complete trading logic chain from signal generation to execution to status management, forming a closed loop, but lacks an effective global stop-loss mechanism that might face risks in extreme market conditions. For risk management, the strategy reduces single-point risk by spreading entry points to achieve cost averaging, with the long-period moving average, ensuring gradual grid adjustments. It shows strong adaptability with moving averages as dynamic references, allowing the grid system to self-adjust, performing better in long-term trends than fixed grids. Though its response to rapid market state changes might lag, understandability is a standout advantage, with clean code, clear logic, and easy-to-understand operation mechanisms suitable for traders of all experience levels to grasp grid strategy basics. In terms of innovation, it merges traditional moving averages with grid trading, implementing high-precision order management through array structures, showing a reconstruction of classic techniques. For practicality, the strategy runs completely automated, avoiding emotional interference and suitable for long-term deployment, though it requires stable trading interfaces. Overall, this is a solid strategy designed for oscillating markets, with innovative thinking and ease of use worth recognizing, making it an excellent introductory strategy for understanding grid trading. Advanced players will certainly want to go beyond these simple grid techniques. You can try more approaches on the Inventor platform, and if you have good ideas, please share them in the comments so we can learn and improve together.